Good to see you. Thanks for being with us. What do you make of or read into GE's outperformance in recent months relative to the Dow and relative to some of the Magnificent Seven stocks? Is it a telltale of anything?
I think what we're seeing, Tyler, can be seen in other areas too. If you look at what happened in March, you had value outperform growth. You had small caps outperform large caps. You're starting to see the market broaden out. It's not just the Magnificent Seven anymore. And investors realize if we're really going to have a soft landing and the Fed is going to cut rates, we need to start broadening out. We need to diversify. So we're seeing opportunity in cyclicals, in industrials like GE, in energy, in financials, as well as small cap. And that's where investors need to start focusing. Tech has had by far the lion's share of inflows over the last 12 months. Valuations are still extended. It's really a good opportunity, and the market's telling us this too, to look at other parts of the market in order to balance out our portfolios.
At the same time, David, what's interesting in tech, they obviously have sort of the AI, the generative AI wins at its backs, but you've seen valuations actually come down. You have an Amazon with better profitability. You have an NVIDIA with just blowout sales. So are they overvalued? Do you have to be more discerning, not just buy the Mag 7 or even the Fab 4?
One of the things that's encouraging to us is that we're seeing stocks actually trade on earnings growth, projected earnings growth, and not just on monetary policy. What's the Fed going to do? So, yes, I still think you want to own technology. Microsoft is a great play to own for AI. And you need to own those types of companies because they still do have some of the best earnings growth in the market. But at the same time, it's important, particularly if we get into what should be one of a recovery rally, to own these other sectors as well, to diversify, look for parts of the market that are less expensive, that also have attractive earnings growth potential.
What about the small cap area? It's been hard to make money in that part of the market, relatively speaking, over the past few years. What's the best play there now?
Well, small cap has been hard, Tyler. You really hit that. I think one of the issues with small cap has been the problem is there's a lot of companies within the small cap indices that don't generate a profit. Rising interest rates are going to have a bigger impact on small cap companies because they don't have the ability to weather that as well as larger cap companies do. But I think if you look at healthcare, that's a great opportunity in small cap. Some of the banks, some of the regional banks, I think you can do well there too. Small cap really needs to pick up the pace. If we're going to have a true broadening out of the market and a true sustainable rally, we need to see small cap perform better. And that's one of the things we saw in March that was very encouraging.
Right. Well, not exactly that way in today's market. The Russell 2000 is the laggard.